What's up, everyone, and welcome back to the weekly analysis here at Logic Effects. It's Matty again, and I'm here to run down a NZD Japanese yen Forex analysis idea, and I've just titled it "The Big Short." Is it coming? Well, in this analysis post and this video, we'll actually find out, because I actually think, on a personal outlook, that this looks like a very interesting Forex pair to look out for, and definitely add to your watch list moving forward in the next couple of weeks. And in this analysis video, I'm going to go over the steps I took to come up with this short idea, so that you can then have a go yourself and then think in an economic level how you're going to approach trading Forex. So firstly, step one in the analysis is always looking at the Logic Effects macro currency strength meter, and this strength meter uses economic data to determine the weakness or the strength of a currency in the future, and it gives us a good idea on a domestic level. That means, like, on an individual basis, what each currency is going to do, because it analyzes the country's economic data. So in this case, we have NZD in the blue, and we have Japanese yen in the purple. And what's been going on in the last 2 weeks is very, very interesting. So we've had New Zealand dollar go from a positive score of over 28, and over the past 10 days, it's actually dropped down to a negative score of -20. And that's very interesting news, because what we're here to identify is that essential change in economic data when it goes from a strong to a weak, or a weak to a strong. That gives us an idea whether to long or to short. It's really that simple. On the flip side, we have Japanese yen in the purple, and Japanese yen has seen a weak score of over -70 odd, and it's now gone to +40 over the past 10 to 16 days. Very, very interesting data, because what that's created is a crossover in the macro currency strength meter, and that potentially means this trend of downwards pressure, downwards economic data may continue for the New Zealand dollar, and it may continue this uptrend for the Japanese yen. What does that mean? That potentially means short NZD, long Japanese yen, short NZD Japanese yen. So, interesting data coming out on there, and what we actually have here is that New Zealand are actually one of the only countries in the world, there's only a couple I believe, that have been able to control the COVID-19 pandemic quite well. So since it came out, there's only been 22 deaths and there's only 25 active cases, and that's very, very positive for the New Zealand dollar. It's not great for a short idea, but it's really good on a level of the pandemic, because it just shows how great New Zealand's government have actually been able to handle the situation. But indirectly, other countries have been affected, the likes of United States, UK. If you remember, New Zealand has a large chunk of their GDP which relies on tourism and travel. But because all these other countries, all these Western countries, all these Asian countries are having to lock down, it's caused aviation companies to actually close their doors, close their business until a future date. And this has created a lot of uncertainty in the travelling sector, a lot of uncertainty in the hospitality and tourism sector, and New Zealand's taken an indirect hit because of that. So New Zealand's economy is expected to shrink 5% this year, but bounce back 6% growing in 2021 and 2022, assuming everything goes well and there's not a continued phase of COVID-19 that keeps popping up every couple of months. So the recovery signs are looking promising. Inflation is looking to rise to 1.8% next year, and then 2.2% the year after, which is quite a good level of inflation. It does create, though, a downwards pressure on the currency value, and especially because the Reserve Bank of New Zealand is looking to keep their interest rates at 0.25%, so they're looking to keep this very low. And they actually mentioned that the exchange rate of NZD USD, which is different to the one that we're analysing, but it's similar, is looking to stay below 0.68. And that gives us a good conviction that, right, if these central bank policymakers are thinking the exchange rate is going to be lower than this level, there could be a potential short idea coming up. So, Bank of Japan, what did they have to say? Well, 3 months ago, they mentioned that Japan's economy will likely improve later this year. And what they've done is actually prevent further economic damage and COVID spreading successfully. But assuming that this measure does work continuously throughout the rest of the year, they have predicted that Japan will continue to grow within by the end of the year, which is good signs. But it's very volatile. So remember that it's very volatile. It completely relies upon the world, the rest of the world, being able to avoid a second wave. And Bank of Japan does not have, it can't control everyone. It can control its own country, but it can't control everyone. And yeah, it just shows like each country can be indirectly impacted, even if their central bank's doing a great work on suppressing what's going on in the economy. It can be indirectly affected because of trade, imports, exports. All these things have an impact on the currency exchange value, and so if you see here, the likes of the United States and other countries, if they continue to open businesses with a high infection rate, it is likely that a second wave is going to occur. And this puts an upwards pressure on the Japanese yen, because when there's cases of uncertainty, what happens? The Japanese yen increases value. Just like gold, when investors are scared, gold prices go up. And gold right now is at all-time highs, which we'll go into on in a bit. So overall in the analysis, we've given New Zealand dollar minus 30 score and Japanese yen a plus 28, which overall gives us a NZD Japanese yen short idea. So when we actually looked at the GDP differentials between the two economies, we did find some interesting data. So the GDP differentials have been above the 0% mark for majority of the time. So that's why you see the NZD Japanese yen exchange rate, it has been increasing over the past 20 odd years. But since 2014, if in the blue line, the GDP differentials have been on a downwards trend, as you can see here. And that's similarly what happened from 2002 all the way down to 2007. See that there? And if that trend does continue, we may see the exchange rate further drop, maybe to the 2008 levels we saw over here, which is around the 55 mark. And if it does, that's a really good area for our trade to hit, because that gives us a really great risk reward and a potential downwards trend which we can scale into. So if we actually look now into the future predictions, because New Zealand had such a good outlook of the future, Japan was also decently outlook, but there was a differential of 3%, which would push it all the way back up to here. So the blue line would look to increase back up to here in 2021 or 2022. But before that, it may look to decrease. So until then, we might see some economic signs of contraction. And it also relies upon this whole COVID thing not creating a second wave throughout the world. If there is, that NZD Japanese yen is definitely going down, just like it did in March. But that's why overall the GDP differential is saying that it might not be a good time, but then again, it's a lagging data point. So we'll have to see what other data points have to say. In the NZD Japanese yen trade analysis, so in the imports and exports to Japan, we identified a few different factors that they rely upon. And that's the case of some raw commodities and materials such as aluminum for the Americans, and cars, delivery trucks, large construction vehicles, refined petroleum. So they are fairly dependent upon a few types of exports, and that's why we've actually included aluminium in the analysis. And what we've identified with the aluminium prices is that there's a 40% negative correlation between the two. So generally speaking, when aluminium prices go up, so when the orange line goes up, we generally see the NZD Japanese yen exchange rate go down. And when the aluminium prices go down, as you can see here, NZD Japanese yen generally goes up. Recent data has actually shown the correlation not fitting, but the overall data over the past 10 years has shown that there is a 40% negative correlation. So only 40% of the time we're looking at this relationship taking place. And the most recent data suggests a 3% growth in aluminium prices, which should equate to a potential short in NZD Japanese yen, because if aluminium prices are going up, if there's support level for aluminium prices and it continues to go up, we may see NZD Japanese yen trend even further down. That's what we're looking for in the analysis here. That's what we're looking to monitor. Definitely keep an eye on aluminium prices. And we've also included gold because we know gold is one of those safe haven safe haven commodities in the world, which investors flock to in the times of uncertainty, such as what's happening now and what happened during the 2008 crisis. So what we've identified here is a similar relationship of a minus 42%, which means generally 42% of the time when gold prices go up, so when the orange line goes up, NZD Japanese yen goes down. We can see this relationship happen over the past 5 years. It's still continuing to work. And recent data has shown that gold has hit, all-time highs right now. It's hit the price of 180, I believe, divided by 10, so about 1,800. And the recent data has only shown a 0.08% growth in the past month, which gives us a negligible score of 0. But it's definitely one to watch out for, because if we see gold prices increasing in the future, that gives us even more confidence of the idea. But if we see gold prices, get rejected at this level, it creates that confirmation that maybe we're too early, right? We don't want to get in the trade yet. Maybe we're too early, and maybe it's time to wait and monitor until gold prices are going up. Similar with aluminium. So that's one to watch out for. Definitely remember that. Write it down. Wait for the gold prices to be increasing. Wait for aluminium prices to be increasing. That gives us way more confirmation that this NZD Japanese yen short idea is potentially going to work. So definitely keep an eye out. Again, what's the next factor? We've included Toyota, and Toyota is one of Japan's most successful car manufacturing companies, and it's one of the most successful car manufacturing companies in the world. It's recently only just been taken over by Tesla as the highest value in the stock market. So what type of correlation does NZD Japanese yen have with Toyota? Well, just looking at the chart alone, you can generally see a gist of what's going on, can't you? They're kind of just overlapping each other. They're similar in a sense. So as the orange line goes up, so does the blue line. When the orange line goes down, so does the blue line. And that actually means there's a positive correlation of 69%. Interesting number, right? 69. So this means roughly on average 70% of the time when Toyota performs well and it's increasing in value, so their stock price is going up, their share price is going up, NZD Japanese yen generally follows suit as well. But when it's going down, so does NZD Japanese yen. So what we saw during March this year was when the whole COVID thing happened, Toyota's stock prices, share prices tanked. So did the NZD Japanese yen. What do we have here in recent data? Well, recent data has only shown that there's been a slight decrease in value of the share price, which is quite negligible overall. So we really need to keep an eye on Toyota stock prices, because if we see Toyota share prices continue to fall, as they have done in the past, when this whole uncertainty is created in the world, we will see the NZD Japanese yen exchange rate potentially fall as well, with a much higher confidence now of just about 70%. Because these are highly correlated. Definitely one to add to your analysis, because you can just see, in the past how well this has worked in using as a confirmation indicator. So maybe not using as an overall forecasting tool, but just getting in at the right time, because that's what's really important, really. You could forecast, but what you really want to be doing is making sure you're not losing money and making sure you're getting in at the right time, because you can forecast the NZD Japanese yen exchange rate to go down, but you don't know when that's essentially going to happen. So you always need to be ready, and you always need to be looking out for those confirmations before you jump the gun. It's really important to take that into account when you're trading Forex. So the next point we've analysed is the interest rate differentials, and what we can see is actually over the past, how long is that, 20 odd years, nearly 22 years now, the interest rate differentials have dropped from 8% all the way down to just under 1%. That's in the blue line. And the exchange rate during that time, it was dropping at the same rate, really. So when it dropped here between 1998 and 2000, so did the NZD Japanese exchange rate. But when the differentials increased from 5% all the way to 7%, we saw the NZD Japanese yen exchange rate also increase. Then when the whole 2008 financial crisis happened, boom, central banks reduced their interest rates down to zero. We saw the interest rate differential drop. What happened? NZD Japanese yen dropped too. So people shorted that. Japanese yen increased in value. Why did Japanese yen increase in value? Because when investors are scared and uncertain, the Japanese yen value increases. Remember that. And it's just an overall trend we're seeing now. So as this interest rate differential continues to drop, we can expect the NZD Japanese yen rate, NZD Japanese yen exchange rate to continue to drop as well if the interest rate differentials continue. That's one to look out for, and that's why we've also pinpointed that in the analysis points that we've seen in here. We also have the NZX50 against the NZD Japanese yen exchange rate, and the NZX50 is the main stock market index in New Zealand, and it includes 50 of the biggest stocks in the New Zealand stock market. Overall, it has a 17% correlation with the NZD Japanese yen exchange rate. So as the NZX50 goes up, 17% of the time, so does the NZD Japanese yen exchange rate. We haven't seen that relationship continue in recent data over the past 5 years. So it'll be interesting to see what goes on in the future. What do the COT participants have to say though? So as traders now, we have like an overall gist that on a fundamental level, on an economic level, we want to be shorting NZD Japanese yen. But that doesn't mean we just click short straight away. We want to be waiting and confirming and waiting for the best probable time to get in on this idea. And when will that be? Well, if we look at the NZD COT indicator, if you don't know how to do that, you can watch one of our videos on how to make it yourself. If you're already a Lita member, LogicFX member, you'll have access to this, which is automatically updated on a weekly basis. But what do we have? We have hedge funds overall in a net short open interest in the markets. And this is a good positioning for our idea because it means that hedge funds are actually overall shorting the New Zealand dollar, right? But for Japanese yen, what has happened? It's the same again. So hedge funds went from longing the Japanese yen, right? They went from longing it, and it's just gone down to a short position. So right now might not be the best time, but it's really one to monitor because these have cancelled out. So it means they're shorting the New Zealand dollar and shorting the Japanese yen. So these have cancelled out. We're having neutral bias on a sentiment level on whether we want to short NZD Japanese yen. Obviously, the best time to be confirmed by sentiment would be NZD positioning for hedge funds is below zero, so it's where it is right now. But Japanese yen was above zero, so if the pink line was above the zero mark, this will give us a really, really great confidence in the idea. But because it's not there yet, it might be one that you want to be watching out for until you start trading this currency pair. So what do we have on the price charts? Well, on a weekly level, if I just scroll down to here, we have 3 key points on the trend line. And I've just outlined it on TradingView over here. We have the first point of the trend line, which happened in 2018. We have the second point, which happened at the start of 2020. And then we have a third point now being reached and rejected in June. So on a daily basis, what's been happening? Well, on a daily basis, since that level from the start of January, that trend line which has been respected, sellers came in, pushed the price all the way down to 60 from 72, which is a huge move overall. We've seen price retrace back up, as countries imposed lockdown measures, as they started imposing safety measures for the whole pandemic. The NZD Japanese yen exchange rate started to retrace back. But as soon as it reached the sell zone that I've outlined in the yellow markers between 71.2 and 73.5, the buyers got rejected. So there's a lot of buying power up until the sell zone. As soon as they hit the sell zone, we saw sellers coming in. We saw 3 large engulfing candles pop in straight away, 2 or 3 there, and we saw price start to congest at this point. There's a little bit of indecision. And what was going on? Well, if we look in the lower time frame now even further, we saw that this is the trend line here. This is the sell zone that I marked as well. A lot of selling power. Buyers tried to come back. It did push price back. Sellers coming in, buyers coming back again, sellers coming in again. There was a low created. So another low that was created, a lower low and a lower high. Right? Lower low, lower high. Since then, price has started to, start a mini rally on the 4-hourly level. And what has happened most recently? Well, sellers came in again. As soon as it started reaching this sell zone, it was getting close, sellers started to pop in. We saw lots of evening star formations, a lot of these candlesticks with the large wicks, a lot of these doji type candles coming in. This is a perfect formation for a short here, which is an evening star on the 4-hourly. And that just shows sellers do have a lot of power at this level. They do have a lot of orders, and it's pushing the price back down. And that's really great for our idea, because what we're really looking for, is a 1 to 3 risk reward on a minimum. And if you've taken the Logic FX masterclass, you'll be able to work out a rough ATR volatility analysis on NZD Japanese yen, which will give you a stop loss and a target, which is somewhere probably around here and down here. And that is basically the NZD Japanese yen idea moving forwards. Definitely watch out for those factors that I've mentioned above, such as gold, aluminium, and the COT positions. And if you haven't already watched our fundamental web class, our fundamental strategy webinar, it's a free one. Definitely give it a watch. It's going to include lots of useful economic indicators within there for you to analyze and start yourself. If you want to actually start, learning the fundamental side of Forex trading, learning how to analyze economic data, I definitely think the Logic FX Masterclass would be for you. If that is, definitely give that webinar a watch, fill out the psychometric test if you think you're cut out for it, and we'll get in contact with you. We only have 12 limited spots per month, so, it's one of those where we only choose people that have a high aptitude of trading. And if we don't think that you're good at trading, we don't think that you'll be, a successful participant and member within our community, we actually won't accept you onto the masterclass, because trading's not for everyone, Only those that want to put in the hard work, actually dig into the data and do it all yourself mentality, those are the ones that are going to be successful. So thank you for watching. Do make sure to subscribe to, keep up on these next week's analysis. We do have little videos slotted in between as well. And if you're not already hitting that bell icon on the YouTube, definitely hit that bell icon as well. Like to see you in the next video. Keep subscribing, keep liking this video, comment what you think about the analysis as well, because I really like your feedback on it. And thank you for watching, everyone. Peace out. It's Matty.